Thank you very much. So this is there's a pointer, right? Can it work? Oh, you do it on here, do you?
Yeah, you just.
I don't know.
I think you're pushing the wrong button. It's that's the laser pointer you're pressing, and then the forward's the big green one.
Okay. Yeah. Okay, thanks very much. Hi, I'm going to keep this presentation pretty rapid. I'm going to also pick up on some things that Dave Lotan covered this morning, I thought very well in his keynote presentation. Those being the importance of free gold, the importance of buying sunk costs, the theme of buy, not build, in terms of where certainly at the junior exploration stage we're trying to get to as rapidly as possible to attract a developer to come and buy us, but also the importance of discovery. So we're undertaking low-cost exploration for shallow, high-grade gold in an area of North British Columbia called the Toodoggone. I am going to be making some forward-looking statements. So hopefully you've heard of a theme called the Golden Horseshoe in North British Columbia. It characterizes very well all of the exploration that's been going on for gold, silver, and copper. Many of the names you'll be familiar with, certainly to the western end, where on the western side of the Golden Horseshoe with the likes of Brucejack, Eskay, Snip, and also to the north with Red Chris. What's less known is the eastern limb, where there is a history of high-grade, small-scale production, gold and silver, but also up until 2011, the Kemess mine owned by Centerra operated for copper and gold. I'm going to be focusing in on that eastern limb, and specifically a production corridor. It's road connected. It stretches around 60 kilometers from Kemess up to the north, and the final end of the road is our mining lease, a mining lease called Metz. So I'm going to be zeroing in on what's going on in that particular area. But if you go up from Kemess, you go past a property called Joy. That's a Freeport Hunter Dickinson joint venture. Freeport now, I understand, owns 51%. Then you come to a big airstrip, the Sturdy airstrip. It's where they flew in all the historical mining equipment. And then in that northwestern part of the corridor, there are 5 former producing mines, and TDG owns 3 of them. We completed the acquisition of those assets from Talisker Resources in 2020. So everything I'm going to be describing today, we've managed to achieve in 3 field seasons. We're moving into our 4th season this coming season. So what's so special about this area? Road connected. TDG has the opportunity now for high-grade gold discovery, but also corporate advancement in various ways. But we also have existing infrastructure. Our Shasta open pit project has an existing indicated and inferred resource. We put that on the books in 1.5 field seasons for a fraction of the price that some of the analysts that have written us up predicted. And we've got that to the point where we now know how to grow it. And certainly there are satellite opportunities around it. And also to the north of Shasta, a project called Newbury, which Newmont first identified in the mid-'80s and weren't able to drill it because they only owned half of it. So in aggregate, we think that the Greater Shasta Newbury property has the potential to go over 2 million ounces, potentially to 3 million ounces open pittable. We think we know the roadmap to doing it and how many dollars it would take. And we'll be looking for some kind of corporate or strategic investment to advance that. But as of right now, we don't need to spend another penny on that project. We also have something called Baker. Baker operated in the 80s through to the early 90s at 30 grams a ton head grade, 12 gram a ton cutoff. The challenge they had there, epithermal gold and silver, was they were getting a significant copper signature. We think actually it's a copper gold moly porphyry system there. And we've been working systematically through all of the historical data and undertaking our own survey work in the last year to try and show how that project should be advanced. And we think most likely through a joint venture. So again, we don't need to spend another penny on that project. We've got it to the point where we wanted to get it to. We also have advanced infrastructure. We've got the big mining road that comes right through our property, but we've also got the Oni mill and the only tailings licensed in that northwest part of the corridor. It's a small mill. It's in really good shape. All we've done is taken the steps to protect it. The restart cost on the mill at 200 to 250 tons a day was estimated at just 2 million Canadian dollars in 2021. We think it would be better to double its capacity and add in environmentally friendly measures, in which case you're looking at somewhere between 8 and 10 million Canadian to restart it. We're not miners, we're explorationists. And so what we've been doing is getting all of this infrastructure and the permits in good standing and maintaining them in good standing for a specific reason. We want, by the end of this year, to be starting to attract a developer into the area and providing them effectively a turnkey operation that they can start with and then take on the exploration opportunity as upside for themselves. We've got mining leases. Mining leases are very important in British Columbia. They're 30-year mining leases through to 2051 to 2053, so plenty of runway. They're a level above mineral claims, and you're allowed to undertake certain activities on them that are helpful towards advancement towards production. And again, as I've mentioned now, we think we have M&A potential for an operator that's looking to buy, not build. And this is then what I want to talk about today, because for us, this is our first field season working on a project called METS. It's our third mining lease. We only got it extended in October 2022 for 30 years. So 2023 was the first chance to get there. Why is it so important? High-grade gold discovery potential with existing underground development. So zeroing in on METS, high-grade, thick, shallow, free gold, virtually no silver. Discovered by the same team that made the discoveries behind Snip and Eskay Creek back in the 80s. 30-year mining lease, road connected, 350 meters of underground development in situ with no extraction. We took the historical archive, and in December 2022, we published a conceptual target for this project based on just under 1.2 kilometers of theoretical strike length of around 1 million tons at 14 grams, giving us around 600,000 ounces using a 3 to 5 gram cutoff. And if there's one thing that Dave emphasized this morning, it's the importance of free gold and grade. We went into the historical A zone where the team behind Skeena had done the majority of their work, and we drilled 5 holes in 2023. We went into the guts right next to the historical workings, and that was our first hole. We hit 20 meters of 11 grams, right where we expected to hit it, including 7 meters of 21. And it's the depth that's important here as well. It's very shallow, 19 meters below surface. We then bookended that zone, and we tested for a halo. This area has a history of being open cut and then small scale underground. And so it had never been tested for halo mineralization. And we hit 5 meters of just under 6 grams from 17.5 meters. We only started assaying at 17.5. So this project is pretty special. Our 5th hole, we were intending to drill through some controlling structures, more like a geological hole. We had to leave the casing in place because we ran out of time. We'll go back and finish it this season, but along the way, we hit 8 meters of 16 grams from 50 meters below surface. And so zooming out, why this then is a very important project. It was known to have greater potential than was drilled historically. We undertook modern geophysics, including ground mag and VLF-EM, and we have now identified 2.9 kilometers of potential trend on the mining lease. If you remember, our conceptual target was based on just under 1.2 kilometers. We've now identified 2.9 kilometers, so we think this project has a lot more to give. We've also managed, using our modern geophysics, to really characterize the controlling structures, where the quartz carbonate breccia is, quartz barite breccia is located between 2 volcanic layers. We've also now identified the potential for parallel breccias. This thing has only been drilled to 75 meters vertical depth, and it's never been tested any deeper. In 3D, we're able now to see what's effectively a subvertical sheet of quartz barite breccia between 5 and 20 meters thick As I mentioned, only down to 75 meters, never been tested deeper. And we have been able to now characterize other controlling structures there using VLFEM. And we're starting to see the potential for parallel structures as well. We can explain the hits that happened historically. We also believe we can now explain the misses. They were either set too far back or too shallow. And we've characterized the extensions from that main area to the north and south over 1.4 kilometers, 1.5 kilometers. And the parallel trends are about another 1,400 meters. So this property has a lot to give. Why is it so important? If we can access the underground, analyze the historical core, and start to show the extensions, then this property has the potential to grow and to become the highest grade, shallowest, thickest gold in the area that's free gold. Any mining plan would benefit from this. And when you then put it together with our existing infrastructure and permits, we think we have the most advanced projects in the area by virtue of the infrastructure and permits. And our plan, simply put, is to show that it is indeed the thickest, highest grade, most advanced gold project in the district. The mill and tailings to show a clear roadmap back to production. At Greater Shasta to show that 2 to 3 million ounce open pittable potential. Newbury undertake the first ever drilling. And then at Baker, trying to attract a joint venture partner for what could be a game-changing copper gold project in the area, which is close to commence. Expert team, Stephen Quinn, our chair, is a mine builder. You may have come across him with Midas Gold, now Perpetual Resources. He's brought over one of his key exploration geos, Chris Dale. Michael Kosawan is a fellow director, used to work with Rick Rule and the team at Sprott. And we have a large amount of institutional ownership, precious metal funds, around 34.5%. Insiders, including myself, own around 11.5%. Coverage was initiated by Cormark in 2021. And we've also got write-ups by Hayward and Beacon. We're trading around 14 pennies at the moment. That puts us just lower than 20 million market cap. We have a capital raise underway at the moment, and it's wholly focused on that METS project and showing that high-grade potential.